just quick tidbit about Bob in general. He started and sold a very famous company called Knakal and is now the New York Investment Sales Chairman for JLL. So everyone, please welcome Bob Knakal.
Thank you very much. It's great to be here today. You know, last week I was speaking to the Appraisal Institute, and midway through my speech, I'm like, Knakal, here you go again. You're talking about all this negative stuff. You can't be negative. You're a real estate broker. You're supposed to have had optimism injected into your DNA when you were born. And just the statistics and the facts about the investment sales market in New York have been negative for now 50 months, 5-0. The correction, you know, people say, well, we're late stages, we're late in the cycle. If you think we're late in the cycle from the cycle that started in 2010, you're missing what's been going on, at least from the investment sales perspective. So to challenge myself, when Arthur asked me to speak today, I said, you know what, I am going to talk about the positive things that are going on in the investment sales market. I have no idea what the heck they are, but there must be some, so I'm going to dig into it and figure out what the heck I could talk about so I don't depress myself and the audience when I'm giving my speech. So today, what I think the interesting thing about what's happened in the market is that if you look at how our real estate market, particularly our investment sales market in New York, has behaved and performed over the last 50 months, and you look at what's happened in the broader economy, if you only looked at what happened economically, you would say there's no way the investment sales market in New York could be bad. The broader economy is doing great, both in the United States and in New York City. How can we have an investment sales market in New York that is struggling? I say that the investment sales market really turned and started to correct in October of 2015. Within a 3-week period, we saw two sectors of the market react very, very negatively. The first sector was the hotel sector. The second sector was land. Both of those markets are highly important to take a look at because those two product types will change. When a market is changing, those two product types will change before anything else changes. The reason for that is that hotels have leases for just one day, right? So they're highly reactive to changes in attitude, changes in the market. And land, because land is indicative of what developers think market conditions are going to be like 3 or 4 years from today when their stuff they're building is coming online. We looked at those two markets, they changed dramatically, and I remember saying to a bunch of clients in mid-October, hey, you know, the market is different, we missed the market, just take your property off the market. They looked at me like I was crazy. But the fact is, if we look back in retrospect, the numbers bear out that that is indeed what happened. But let's take a look at the economy and how the economy has developed and changed from October of 2015 through today. Okay, so broader economy, jobs. What's happened with jobs? And my real estate stats I know well, but my economic stats I'm going to have to cheat. In the nation, 9.3 million jobs have been created since October of 2015. That's a 6.5% increase in the number of jobs nationally. Locally in New York City, we've created 320,000 jobs. That's a 7.4% increase. So presently, employment in New York is 4.65 million folks. If we look at the unemployment rate nationally, in October 2015, unemployment was 5%. Today, it's 3.6%. In New York City, the unemployment rate was 5.2% in October of 15, is 4.1% today. GDP measures economic activity throughout the country. Our GDP in October of 15, 17.5 trillion. Now it's 19.1 trillion. That's a 9.5% increase. Consumer confidence and consumer spending up 8.6% over that period of time. The stock markets, the S&P 500 was at 1923. It's now at 3,073, up 60% over that period of time. And the Dow Jones Industrial Average was at 16,760. It's now at 27,720, a 65% increase. Interest rates over that period of time have helped in the real estate market. They were at, the 10-year was at 2.05 in October of 15. Today it's at 186. And lastly, one of my favorite metrics, the Small Business Optimism Index, was at 96.1. It's now at 103, a 7.3% increase. So healthy increases in all of these economic metrics, yet the New York City real estate market has decoupled from the broader economy and is taking its lumps.